Hey, good morning, guys. How's it going? It's Scott Criss with the Mortgage Rate Forecast. Your mortgage rates and news. It is the end of July, the 27th, and let's get started with the charts. Here's what we got. We're trading about 102.84 this morning. Yesterday, crazy swings. We actually touched our support level at about 102.60, but we also almost touched our resistance at 103. So yesterday was a pretty volatile day. We opened up just a little bit better in the middle of that trading range this morning. No major reports, and I think we're going to maintain the same trading range between 102.60 here, the green line, and about 103. So we've been struggling with this 103 since early July. So passed on it once, but not for very long. Here we are developing, I shouldn't say an upward trading channel, but we are trying to push up a little bit higher, and we'll see if we can't test this again. Probably not today, but it'll probably be Friday or Monday. If things go in the same direction. So Friday, Monday, we might be testing 103 again. If we can break above 103 and keep above 103 for at least a couple trading sessions, that could be our new support. So we'll see. Here's the reports, durable orders. I think it was just kind of a neutral report. I didn't think it had much beef behind it. Jobless claims, really not a big mover either. I'm going to throw green on it though, because I do think it was bond friendly. As far as news, we do have the GDP coming out tomorrow. And the US dollar reported, some stability while the euro was a little bit weak. That created some volatility in the markets, but that was a little bit helpful for bonds. So keep our eye on that. To kind of quantify where we're at about 103.20 for June was the average trading. Currently, we're at 102.84. That's 36 cents worse. So, let me go back here. So, if the average consumer was getting a 3.9 interest rate last month and paid half a point to get there, if trading was $36 cents worse, that means average consumer to get that same rate might be paying closer to a point. Okay, so you can look up Freddie Mac's average rates across the U.S. down here for the 30-year fixed. There's your reference, but yeah, I think consumers are going to be paying a little bit more, not a lot more from where we're at, but a little bit more for that same approximate rate. So let's talk about projections. My last projection was a hit. In fact, bonds today are right in the middle of that range I was projecting, so that makes me feel good. As far as the future goes through next Thursday, I don't think we're going to see any change. I don't think nothing significant. The thing is, both analysts that I follow are pretty neutral on the fact. They don't think that we're in a downward trading channel. We're not in an upward trading channel. It's just going to depend on the news, guys. So I'm going to maintain last week's projections at 102.60 to 103.20, and that means we're probably, from where we're trading today, we're only probably going to see a fee swing of maybe 1/4 to 3/8 of a point. So it shouldn't be anything too crazy. Unless some weird reports come out, which you would probably hear headlines on the news. So should be pretty relaxed. So we'll see ahead of next week. Anyway, that's it for now, guys. Leave your comments down below. We'd love to hear from you. Everything likes to be liked, and so does this video. Hit that thumbs up before you go. And if you're new to the channel, if you click that guy on the top left, that will get you subscribed. Really not a huge commitment. You're not putting a ring on it. It's just going to give you notifications when we upload new content. And if all of this is new to you and you're like, man, how does this stuff, bond trading, really, I just want a good rate. How does this impact me? Top right, that's Mortgage Bonds 101. That'll take you to that video. That's really great video, fundamental information that helps you as a consumer understand how the bond market works so that you can position yourself to get the best possible rate and fee structure. Okay, guys, that's it for now. Hope you have a great weekend, and we'll see you next Thursday. Bye-bye.